Hello and welcome to The Trade. Let's get you caught up on what traders are watching out there. Copper prices sinking to a 3-week low. This pressured by confusion about the scale of stimulus measures in China and, of course, geopolitical uncertainty. Gold edging higher, lifted by retreating Treasury yields. Investors also awaiting more data that could offer fresh clues on the Fed's monetary easing cycle. Oil prices tumbling more than 4% to a near 2-week low due to a weaker demand outlook and after a media report said Israel would not strike Iranian nuclear and oil sites, easing fears of a supply disruption. And gold edged higher, lifted by retreating Treasury yields. Investors cautiously awaiting more data that could offer fresh clues on the Fed's monetary easing cycle. Meanwhile, Brazilian miner Vale reporting a 5.5% increase in its third quarter iron ore production, reaching the highest level in almost 6 years. And in case you're wondering whether your hot chocolate's going to cost a little bit more, London cocoa futures on ice rising to their highest in a month on Tuesday amid renewed worries over global supply, and coffee retreated from a recent 13-year peak. Well, to get into the technicals, Violetta Todorov from Leverage Shares joined me earlier to take a look at REITs.
I think it's time to start looking at REITs again. They have been underperforming the overall market for quite some time. But given that the RBA is expecting to kick off its easing cycle, I think all those underperforming names are coming to investors rather again. So the first and most probably best REIT in Australia is Goodman Group. Actually, we see a very strong uptrend for a year and a half. And although it appears a little bit overbought in the short term, I think there are plenty of gains in the year ahead. So my ideal entry would be around $34. I'm not very comfortable chasing it up here, given that the RSI indicator, it's already in overbought territory. But I think in the next couple of weeks, we can perhaps get such a good entry. So $34 would be my ideal buy, with an upside target in the next 6 to 12 months of around $40. So definitely looking pretty good.
And when it comes to Scentre Group as well, what do you like about that stock?
Yes, Scentre Group has been also very strong and similar to Goodman for the past year and a half. We are seeing very strong and consistent uptrend, with the RSI indicator sitting firmly in the bull market range, suggesting that this uptrend is likely to extend into 2025. Again, in the very short term, Scentre Group is slightly overbought, and I see a potential decline to around $3.40, which should provide us with a great entry into the stock, with an upside target first at $3.50 and then $4 sometime in 2025. So looking for a little bit of a pullback before we jump in.
Is Stockland Group kind of in the same vein, or is that one that you would be looking at current levels?
Yes, Stockman, I would like again to see a little bit of a pullback here. We've seen the price surging over the past month significantly. So if we see a pullback to around $5, this is the level where investors should start looking to accumulate the stock, with a potential upside target of $5.60. However, that level could be exceeded towards the end of 2025.
Now, when you look long-term at GPT Group, it doesn't look good, but it's done quite well over the past 12 months. What are you seeing there?
Yes, GPT is a little bit of a laggard. However, I'm seeing some signs of a large bottom formation. We've seen key resistance levels being broken recently, which suggests that a new primary uptrend has started. So I'm very confident that GPT will catch up with the rest of the REITs in the sector. So I would be looking at around $4.70 as a good entry into the stock, and I think we have pretty good opportunity to see that level reached within the next 3 to 4 weeks, with, of course, an upside price target over the next 6 to 12 months of around $5.40, but it might turn out to be conservative after all. So definitely having my eyes on GPT Group.
Now, Charter Hall, it's trading around 16 Aussie dollars. What do you see there in terms of potential momentum? Is it going to go higher from there?
Yeah, I'm very comfortable over the long term. We have a very clear breakout on that chart as well, which is confirming that a new primary uptrend is starting. So I am expecting to see a retest of the breakout point of around $14.70, where strong buying support is likely to arise. And this is the level where investors should be looking to accumulate. I'm expecting strong rally to unfold afterwards with a potential price target of 1750, but that level could be exceeded over time as well. So looking pretty good as well.
National Storage, I mean, kind of a dividend yielding stock as well. It's teaming up with Singapore's sovereign wealth fund as well. What do you like about, I guess, the self-storage sector here?
Yes, we are seeing a very similar pattern. The large consolidation has been broken upwards, suggesting that national storage is entering a new phase of a bull market. So I am expecting to see the price rallying to around $2.70. However, $3, it's also achievable price target, and we are having around 4.5% dividend yield. So this is a very, very compelling buying opportunity around current price levels.
Okay, Violetta, what is else on your radar in this space? VCX, I know you're having an eye on as well.
Yes, VCX is looking pretty good. We are seeing a very strong uptrend on the chart. The stock reached slightly overbought territory in the short term, and I wouldn't be surprised if we see a bit of a pullback to around $2.14, where I believe that pullback would present a very good buying opportunity with a subsequent rally to around $2.60. However, that price target can turn out to be conservative, and we can see levels to around 280 by the end of 2025. And this is a very good dividend yield player with around 5.9% of a dividend. So VCX is providing really good investment opportunity.
If somebody wanted to look more at a fund overview, what is the Real Estate Select Spider Fund showing us here?
Yeah, I think that's a very good one, especially for investors that are looking to diversify away from Australian REITs. And I think the Select REIT fund, the Spider, which is tracking a Select funds from the S&P 500, is presenting a pretty good buying opportunity. Dividend yield is around 3.2%. However, we see a lot of capital appreciation potential from current price levels. I think from here we can see the fund trading to around $47.50, but in 2025 I think the fund can extend to around $53. So this is just giving a very good potential for Aussie investors to diversify to the US rates market.
All right, Violetta Todorov from Leverage Shares there speaking to me earlier about her picks in the REITs. That does it for this edition of The Trade. Be sure to join us next time.